please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, it's a red screen, red all across, 400 points on the Nifty, 10,358 is where we are at this point. You're with us here on a fresh new edition of Trading Hour, and I mean, trading is completely in favor of bears right now. Look at any market indicator, and it's basically flashing alarm and a lot of red. With me is my colleague Ekta. Ekta, hi, morning.
Hi Prashant. Well, I think there has been a little bit of a recovery from the day's low, but nonetheless it seems as though that gets sold into as well. A lot of what we're seeing on the screen today is courtesy the global market, so that's important to track. And currently the Dow futures, the European futures are not showing any sort of respite. The Dow futures at one point in time was down over 800 points. It's recovered to around over a 500-point cut. But nonetheless, I think for today's trading session, what would be very important to watch would be the European market opening and whether we would probably see a sell-off once the European markets open. Besides that, a lot of stocks to watch out for. So, for example, we have stocks such as Tata Motors, which has recovered from the day's low, but nonetheless, that's stock still down around 6 to 7% odd. We have PNB, which is going to be coming out with its numbers probably in the next 45 minutes to an hour. So, do watch out for that stock. Indiabulls Housing Finance, along with all of the NBFCs, which have seen that kind of decline, and not to mention other stocks such as Lupin and Motocorp, which will be releasing their Q3 numbers as well, if you just want to throw in some more variables.
I mean, the point about Dow futures and US futures, European futures are actually is quite important because, you know, even if you would want to nibble, you know, pick a little, some stocks that you like and you like the prices that you're seeing, you know, what would keep you away and keep you scared is, well, saying, oh, look, I mean, look at the S&P futures, 500 futures, they are showing another big dip. I mean, the Dow futures, for example, before I walked in 10 minutes back, were showing some 900 points cut. So there is that fear which I think is going to keep people away. But Ekta, one thing one has to remember is the Nifty has already lost about 700-800 points in the last 6 trading sessions, right? Actually 750 points or so flat. Now, it's almost impossible for the market to I'm not saying it's impossible for the market to decline, but it's impossible for the market to decline at this rate. I mean, then basically in 20 days we'll have to close the exchange. I mean, if the decline sort of, you know, goes through at this rate, and same is true for, I mean, are we saying the Dow is going to decline 1,000 points a day? Then in 20 days, I mean, the index will be back at zero, right? I mean, so that's not going to happen. So the question one has to ask oneself is,
these probabilities are probably scaring a couple of people out there.
No, but it's not possible, right? I mean, the rate of decline which we're seeing, I mean, the Dow futures may be showing you 900 points, 1,000 points lower, but the fact is, after 1,100, 1,200 point cut, are you expecting another 1,000 point decline? You know, I would say the probability, it's always probabilistic, is unlikely that you will see that. But it's keeping people away, and maybe rightly so. So I think, you know, maybe in the next day, you know, maybe today, maybe I would say that actually not today, but tomorrow, you would have some kind of settling down. I mean, I think that's the best word that you can use. Not a bottom, not the point from where the market starts to recover, but basically a settling down of things. Right now, things are completely haywire and unsettled, and you got these big falls. And I think by tomorrow, you'll have a bit of settling down, and then it can again sort of, you know, go back into a choppy up and down and painful kind of a phase. It's possible, but one thing I think one can take away from what we've seen over the last couple of days is that this gung-ho, go-go kind of market, right, where you basically, it was almost akin to throwing a dart and picking up a stock, and you basically had to just bend and pick up money. I mean, that was the market we were in. That for now seems to be kind of behind us. So it will now require effort, it will require discipline, things which I think were, you know, which were required at any point, but people were making money even without those things. So I think but I think we should have some settling down. The rate of decline can't proceed at this rate. That's the only point that I'm making. Okay,
so maybe there is some amount of stock which is being removed from the markets. But at this point, let's in fact get in Sudarshan Sukhani to talk about what he is envisaging for the remaining part of the trading session. Sudarshan, hi, morning, over to you then. What is it that you're recommending, and how would you take what say the European futures and the US futures into cognizance while deciding what the rest of the day strategy would be for you?
Yeah, good morning again. Well, first for the Nifty, The markets have fallen for 3 straight days, and I would expect strong support to emerge sooner rather than later. Now that support can emerge at current levels or at 100 points lower. That's difficult to say, but this is the time when support should step in. The support will simply ensure that the next phase of this decline will be much more orderly as compared to this waterfall decline. It doesn't mean that markets have stopped falling, will stop falling, but it will be much easier to manage that decline. So my suggestion is, to you, any rally you see, you buy Nifty puts, assuming that in the next few weeks the markets will slide lower, but do not do any panic buying or selling. The markets will become much more orderly soon enough.
Okay. In this kind of market, what are the stocks that you would be recommending?
Yeah, before that, let me answer that European futures and US futures question. See, the US futures sometimes give a different impression pre-market, and when they open, they do something very different. Yesterday, the US futures were flat in the morning, but when finally they closed, the Dow was 1,000 points lower. So I do not pay much attention to US futures pre-market.
Your trading, stock-specific trading ideas, Sudarshan?
Oh yes, I'm sorry. Yes.
Yeah.
See, there are only short selling opportunities in this market, at least for intraday. CanBank is a short sell, NMDC is a short sell, and for me the third is Godfrey Phillips. Do not carry any short positions, do not carry any long positions overnight. The only position you should carry is to buy Nifty puts, and of course carry that position.
Okay. Sudarshan, in terms of a couple of huge decliners this year, I'm not only talking about today, but I'm talking about stocks which have fallen off a cliff from the Nifty space on a year-to-date basis. So, for example, Bharti Airtel down 18.5% year-to-date. We have Aurobindo down 14%, Dr. Reddy's down 14%, Tata Motors down 14%, and Bajaj Finance also down around 11%. If you had to pick up stocks, say, from a medium perspective, which one would it be?
Well, I would still go for pharma stocks. So Oro and Dr. Reddy's, while they are down on news, not because of a momentum change. So at some point, these two stocks will probably stop declining. And given the weakness of the rupee, and I have been suggesting buying USD contracts, futures. So I would go for these two, Oro Pharma and Dr. Reddy's, and completely avoid Bharti and Tata Motors.
Sudarshan, thanks very much. Good speaking with you. Appreciate you joining in with that perspective. Ajay Srivastava is CEO. Okay, I think we'll have Ajay Srivastava of Dimensions in just a bit joining us. I mean, I think let's just use that time to just again turn our attention to the futures segment, because what is happening right now is happening. But what people are watching out for is what is going to happen in the European session, what's going to happen in the US session. And if those two sessions in the futures segment are going to show extreme pressure, the recovery is going to be quite elusive, at least for now. I mean, let's see if things remain like that till 3:30 or they start to change. I think we have Ajay Srivastava on the line with us. Ajay, thanks very much. Good morning. Good to have you here.
Good morning.
Your sense, I mean, 400 points lower on the Nifty. What would you like to sort of make of things and where we are headed?
No, I think, we are headed in choppy water. That we all know about it. But I think, the point really is that question you're asking me, should you sell, buy, or hold? Is that what the decision investors are making? And I think the situation is emerging in a manner that, at least if you're looking at lots of mouth-watering mid-caps, hold off for a while, because you may find mutual fund redemptions to become a big burden on this market in a very short order, because the exits of the mid-caps is very limited. Therefore, you'll find mutual funds could create mayhem in the market if redemptions continue, because people are not able to get enough out of the stocks, so they might redeem the mutual funds. One. Two is, if you love the stocks and very good stories, I don't see any reason why you should not add up. These things will happen. We will see choppiness. We will see retraction of the market, and we will see the upside as well. So I don't think we should fear buying what we like most. Lots of it has good prices now. So start nibbling. I don't see an issue. The third issue is very large caps. I think we have an FI issue. Let it play out for a day or two and then start buying, because very clearly the selling will come from overseas, even if in small drifts and dabs, and with no buyer available in sight, you will see still more correction in large caps. So wait a day or two, let things US Dow settle down, and then you start to buy into it. I think it's still going to give you a very good value buy in the market in the next 3 to 5 days as things settle down.
Ajay, hi, morning.
Good morning.
You know, we've seen declines before for the markets, and it's all a part of life. But what is different about this correction vis-a-vis what we've probably seen in the past?
I think for, let's talk of India. I think if you become global, then become confused. In India, what is different now is, as we're talking to more and more investors, is they are not seeing great optimism in the return of the old prices in stocks. I think they're seeing uncertainty, they are seeing choppiness, they are seeing risk in the market, and they want to capture the returns, whatever they have left, and try to get out at least of the small and mid cap. I think that's what is different compared to last 3 years, where every opportunity was a buy. For the first time we are selling, people are saying, let's book some profit. We have an elections coming up, which is uncertainty. You saw the fiscal deficit playing out. Interest rate will rise, maybe not in this policy. In the next policy, it has to rise. So why take a chance in this market? So difference is, I think you'll find lots of people redeeming out of mutual fund of small and mid cap rather than buying into the correction. I think that's the one big difference we see for India, at least in the immediate context.
You know, you began by saying redemptions, Ajay. I mean, I know that mutual funds are still getting inflows. You know, the Nifty is down already 650, 700 points or so, but there are still inflows into mutual funds. It's not as if inflows have stopped. You're talking about redemptions. Now, that is another level. And if that were to happen, that would create a fair bit of mayhem once again. Are you suggesting we're already at that point, or that time is some time away?
No, I think we're already at the point, because I think give it another day or two or more of corrections. And, you know, inflows, SIPs have, it's all investor inertia. SIPs keep coming, the bank keeps debiting, it's auto debits and so on and so forth. Initial rush is to buy into the market, hoping that you will catch a bottom. But as a day or two more elapses, as people start to really look at the fact of what's happening to small and mid caps, you will find that there will be some amount of serious redemption, if not already happening in yesterday and today, will happen. And remember this, large-scale redemption have a 3-day value date. So it's not the selling has to be done immediately, money comes to the account 3 days later. So that's a little factor that people may have waited to say, today is gone down, the NAV is so much, should I do it tomorrow, should I do it day after? And that's the kind of stuff which is playing out right now. Some people redeemed early, some people will redeem in next day or two, but I'm 100% sure that small and mid cap, where lots of people are stuck with positions of real equity in the market, unable to get out a good price, will find succor in taking this money out of the market. And I don't see any fund manager today recommending to investors that put the money in small cap and mid cap mutual fund. And I'm scanning the horizon and saying, is anybody saying? In fact, everybody's saying, let's go to large cap.
Okay. So you expect the money to be rerouted into large caps and not a different asset class?
I think it'll be 50-50. I think 50% will be taken out by people in cash. 50 to maybe less than 50 will go towards large cap, because, you know, we don't understand enough large caps as retail investors by and large, and FIs are selling. So there is no buyer of this whole mid-cap story at this point of time. Yes, there are pockets of excellence mid-cap. Nobody is saying don't buy the gaming company. Nobody is buying the largest NBFC. Nobody is saying buy the airport company, etc. They will all fall flat. Nobody is saying that. But whole amount of froth in the system is getting re-rated, and that's a healthy sign. But well, it's come with losses, including chemical company, which were quoting at 6 to 7 times the book value, which never happened. They're all correcting correctly. So I think you will see a non-returnable phenomenon in share price in lots of mid-cap and small caps.
Ajay, thank you very much. But by the way, you know, when you say that redemptions will start, then all this sort of talk that there is a mature equity class now which will systematically invest in market, if redemptions have to start after 2 or 3 days of fall, then I mean, I guess all that was just a lot of talk. Ajay?
There is a thin line between being mature and being foolish. So I don't know which one would like to be called.
Okay. Your view was that redemptions will start. If I were to ask you that question in a different context, if, I mean, you are addressing a fair bit of retail investors, what would you tell them? Should they redeem?
We have redeemed quite a bit.
You have redeemed?
We continue to say that at least 50 to 60% of a small mid cap. You know, in any case, just to share with you, in the last 3 to 6 months, the composition of most portfolios have become 60-40, 60 large cap and 40% was mid cap and small cap. So it's already way towards that. But in the last 3 days, we are seeing more and more. We are advising that you pare your things down, because this is a murky environment where you don't want to take your investors into. You know, you want to take them where you know something's going to happen. Here, uncertainty, who's the buyer of these stocks, what's going to happen to these shares, lofty valuations, interest rate increase on the horizon. Why do you want to take a chance with customers' money?
All right, Ajay, thanks very much.
Take care.
Appreciate you joining in, and we will dial you back soon for more later. Let's take a very quick break. Beg your pardon. 390 points on the Nifty, 10,370 is where we're at. We'll take a very quick break. We're back in 2 more on equities and commodities as well. Manisha Gupta is going to be with us, and we'll also have David Lennox of Fat Profits join in on the commodity markets. There is also a flash on HDFC Bank. The bank has cut most bulk term deposit rates by between 100 and 175 basis points. Remember, we had
SBI do that as well, but it was, I think, for the larger group of deposits. But I think this would be important, and it's important to see how much bulk term deposits in fact comprise in terms of the
for State Bank of India, I think it was under 10%.
Yeah, it was under 10%.
So maybe, shouldn't be that large a part of the book for HDFC Bank as well, but I think we can put out more details in a bit from now. 3 1/3% lower on HDFC Bank. I mean, news flow in a market like this doesn't really make that much of a difference, because you got overriding pressure, top-down pressure across the board on most things.